From the Library of Congress in Washington, D.C.
Least reading room and division. I'm Mary Jane Deeb, Chief of the Division, and I'm delighted to see you. Our division holds programs regularly, organized from our three different sections. So we have the African section, which is hosting the program today. We have the Hebraic section and the Near East section. And the three sections have collections in this division, as well as in other parts of the library. We have specialists with the knowledge of the languages. We have readers and patrons who come from our 77 countries to this reading room. And we're always delighted to have researchers, patrons, and visiting guests join us on programs to inform us about what is happening in those countries. We like to share not only our analog collections, our digital collections, but also we like to share with you the people who visit us and who talk about the work they're doing, the research they're doing, and their knowledge of the countries that we're covering. And we're delighted today to have Mr. Kwabena Addo, who will be talking about a region of the world that he knows very well and he's been working on for a number of years. And he will be shedding light on a topic that we don't often discuss with respect to the countries of this division. But I don't want to reveal too much before Eve Ferguson, our East Africa reference librarian, who invited Mr. Addo to join us, will be making the introductions. And so again, thank you, and Eve will take over.
Thank you. Good afternoon and welcome to the African Sections program, the impact of mobile technology and telephony on job and wealth creation in East Africa, a lesson for the rest of Africa. You'll see that the title up there is a little bit different though. Please be informed that this program is being webcast for later viewing on the LOC website and also on the AMED webpage. So often when we pick up our cell phones, we do it as a convenience and an extension of the luxuries that we're privy to. Rarely do we think about what mobile technology means for developing nations, especially those where landlines and available phone service is not a given. Today, we'll hear something on that topic, along with other important information about how these things that we take for granted serve a vital role elsewhere, especially in Africa. We're fortunate to have our speaker today, Mr. James Kwabena Addo, with us, not only because we narrowly averted a shutdown, but because he currently resides in Cape Town, South Africa, and is in Washington for a short time. James Addo is an experienced investment banker with a specialty in private equity and venture capital opportunities. He has multi-year experience in establishing and managing development finance programs in 6 sub-Saharan African countries, where his focus is financials, infrastructure, and technology, with an increasing emphasis on renewable energy and technology-driven resource transactions. He currently manages his own private equity advisory firm focusing on early-stage venture, acquisition, and expansion financing for frontier and emerging market clients. He previously served as Group CEO of Securities Africa Limited, and prior to that, he was a portfolio manager of Finch African Fund. He has also worked in Nigeria, Namibia, Uganda, Liberia, Zambia, and Angola as Country Director and Regional Trade and Investment Advisor for the United States African Development Foundation, better known as USADF, where he established the first country representative offices in trade and investment programs. James Addo received his BA from Dartmouth College and he received his MBA from the Frank Zarb School of Business, Hofstra University in New York. Please help me welcome J. Kwabena Addo. Thank you.
Thank you very much, Eve. Thank you, Marianne. When I was first asked to present on this, my initial take was to reflect on really the impact of mobile technology on all of Africa. And the challenge that I had was to draw the experience of East Africa, thank you, to draw lessons from that and see how how applicable they were to West Africa, to West and Southern Africa and Northern Africa. It turns out that I didn't have much, I didn't have far to go, simply because embedded in our culture, I'm Ghanaian by birth. We've had financial systems from day one, from things like susu, savings pools, how we trade with each other, barter trade, and so converting that sort of cultural technology and overlaying it with with any sort of new technology that actually expedites it or makes it an easier process didn't seem so challenging. And I hope that you share that with me as I walk through this presentation today. Okay. I just want to share a few facts with you about the space. There are about 2 billion cellular phone users outside of the US and Europe. And out of that, about 700 million are in Africa. And one study actually shows that the more cell phones you put in the hands of Africans, the higher their economic growth is. In fact, one study went as far as to quantify it at 1.2 percentage points of GDP growth boost. This is supported by a growth rate in the penetration rate for Africa in cell phones of 35% over the past 10 years. This is the average. And also the fact that over the past 8 years, we've seen 6 landing points for fiber optics in Africa, with 2 remaining from I think the western side of Africa. I'll share more about that. The road infrastructure has seen about $30 billion in investments. It's grown about 3 times over the past 10 years. By 3, I'm referring to main roads, highways, even some feeder roads. And I think the urban networks have also been improved. I think the very last point, the internet access, one could toy with with that number a bit, but over the past 10 years, is averaged between 30 and 40%. During the years of 2001 to 2003, it was when it saw its highest growth rate, about 52%. Okay, perhaps we should define mobile money, mobile banking, which is the primary use of mobile telephony in Africa today. It's defined as a tool that allows individuals to make financial transactions using their cell phones. And the history has been that in Japan, I think Japan had there's a name for it. Years ago, they came up with the first mobile telephony, but it was sort of an early version of a web-based program, and it was limited primarily to the middle to upper class, and it was for much high value transactions. Over the years, Vodafone of the UK, which owns a significant shareholding in a company called Safaricom in East Africa, proposed that they would like to set this up, a mobile payment system, for Africa, SMS based. So they brought in the British Development Agency, DFID, to provide grants to deliver a pilot. And in 2007, Safaricom launched its first mass market money transfer by text service. They called it M-Pesa, which is a Swahili term. M for mobile, and Pesa, which is the Swahili term for money. It's obviously grown rapidly because it was initially targeted at the bottom of the pyramid. It enabled people to engage in paying for taxi rides, paying for even making payments as little as $1.2, $1.20. M-Pesa now is in the hands of about 14 million people, out of a market of about 17.2 million Kenyans. Now, what M-Pesa has done for the region, East Africa, is it's enabled significant amounts of people who hitherto had no access to any form of accessing, easy money, moving money across, making payments, or even getting basic information on crops. And today, it accounts for roughly about 70% of all the financial transactions outside of banks. In East Africa, Kenya, this is as of 2009 ending, only 19% of the population was actually banked. M-Pesa picked up the 70% of the red portion there, which in Kenya was quite a significant event, because suddenly you had people who, even though they didn't have access to bank accounts, they could actually transact and do business. Commerce took off, the volatility of money, the velocity of money went through the roof. Again, here you see an illustration of really where M-Pesa took off. Between September of '09 and September of '10, you saw a significant boost in the impact based on M-Pesa. And I think actually this is more the subscription of cell phones, but M-Pesa accounts for 70% of this. Okay, so between within a year, you had roughly about a 36% jump in use. It's gotten so popular. It has a high usage than these financial debit cards that are used by that are issued by local banks. In fact, roughly more than twice as of September of last year. And it is projected to grow by about 3 times that in the next couple of years. In fact, it is envisioned to grow to 30%, 2/3. I'm sorry, 3 times the size of issued financial cards by the year 2014. The key players in the mobile market are 3 today. Safaricom, which represents the incubus of all mobile banking globally, actually, maintains a very dominant position in East Africa. They're being pursued by the likes of MTN, which is one of the largest mobile companies in Africa today. Who they have come up with this thing called mobile money, and they're in the process of rolling it out over the next 2 years across all their markets. OboPay, which is used by Citibank here, is U.S. based out of California, and they're currently rolling out in Nigeria, obviously in the U.S. and then the Indian markets. The impact of all this, I guess maybe I should just walk through this a bit, because there are two sides of this. First, very, very specific to the country and the region. The obvious gains to individuals and businesses, just in terms of the time it takes them to get things done. Remittances from all over, both in and out of the region. And then the the sheer empowerment of of the bottom of the pyramid crowd, who typically have no access to credit, any form of financing, it actually gives them it gives them a significant tool with which to to become relevant. Um, and the fourth bullet point, which is very near and dear to me, is the empowerment of women. Being Ghanaian, um, when I was being brought up, it was very very powerfully evident to me the impact of our mothers in our families. I think without our mothers, frankly, most of us wouldn't have gotten to where we are today. To be very honest, we tend to fight with them, a lot, as we grow. But deep down, we know that they have been the rock. They have been the engines that have gotten us here. So when I see, having read, the impact and seen actually of what mobile banking does for women and their, and their small businesses, and also the security that it gives them, that was really very touching for me. It also improves foreign direct investment, simply because the more you see, the velocity of money, from a foreign investor perspective, it becomes easier to make certain predictions with respect to investments. Micro and small enterprises also have, have access to these, types of services through the M-Pesa, because M-Pesa is not just for individuals. You can actually sign up as a as a small business. There is the increased commerce that occurs between and within key members of East Africa is really what has, I think, to my mind, made it probably the most receptive environment to private equity today. Simply because businesses have have better control over their cash flows, they have better controls over their payment systems. The cost of doing business, making payments, is actually much lower. And of course, the last impact, which is very near and dear to all of us, is job creation. I think my last tour with ADF was in Liberia, where we were charged with stabilizing a post-conflict environment. And one of the key objectives of the program was to create as many jobs as possible, because the more secure an ex-fighter is with respect to his source of income, the less likely it is that they'll go back to what they were doing prior to the peace agreement. So it's a very critical piece, and the fact that the mobile payment system is a huge driver of job creation makes it a very valuable tool. We will look at more at the broader aspects of it, across the continent. I think, the first point, which obviously we know from the emergence and success of microfinance, is that there's a huge base that has very little access to financial services, and mobile banking provides this. And I think, for us, the 690 or 600 million people odd who can actually have access to this, will make a lot of sense. I'm a little thirsty. Sorry. Nice glass. The typical market segment that mobile banking makes the most impact on typically earns less than $9,000 a year. This number sounds odd and a bit high, and the reason it is because I've taken a broad stroke across most markets, inclusive of markets like Namibia and Botswana, and those countries tend to skew up the curve a bit. But broadly, it's about 9,000 across the continent. Banking, mobile telephony also creates, as I think I spoke about this already, significant economic growth, as well as commerce, jobs, I spoke about the velocity of money, and it encourages non-cash payments, which promotes the safety, personal safety, as well as the safety of transactions. Well, I'm going to cover today where Africa is, because really now I've given you in a nutshell, a nutshell, what mobile banking has done for East Africa and the effects it has. I'm going to try and stretch that across the continent, because I feel that as a continent, several of the practices in Africa are roughly the same. When you take the migration from Nilo-Sahara back in the I can't remember which century it was, eastern Nigeria, where they migrated and actually broke down into 22 different groups, the Bantu tribes. The practices that they picked up from West Africa are roughly the same. And having lived in those, in all those countries, there's certain words that you pick up. For instance, meat across Africa is roughly the same. In deep, darkest West Africa, enam, which is meat, is the same as nyama in West Africa, is the same as nyama in East Africa and South Africa. The foods are roughly the same. In West Africa, you have jollof, which is a mixture of rice and sauces and stuff like that. When you head all the way out east, they have dishes which are very, very similar in taste and texture. And then things like the morning diet. It's typically porridge. Very starchy. That's remained consistent. Throughout. And so these practices, were also mimicked on the commerce side, where a lot of countries engaged in susu, a lot of cultures engaged in susu practices, where because there were no banks in those days, they saved among themselves. They picked an elder and they saved, and depending on whose turn it was, they drew down on it. I think susu existed way before Grameen Bank came. Grameen Bank, when you really study the revenue model, it is based on, on the SUSU model, except it's, it's more formalized and, and there are a lot more, I guess, internal controls. And so these things actually existed. Let's look at the current infrastructure. Okay, we've seen a threefold increase in roads and the like. We've seen 6 new landing points for fiber cables. We've seen improved internet access, and the mobile networks are also very vastly improved. Here's a schematic of where we are in terms of the fiber. As you see, East Africa, where they have the easy system, that's landed already. South Africa has got its own, all along the coast of West and Northern Africa, all the way into the Mediterranean. They've all had new landing points. So in terms of bandwidth, that infrastructure, is in place already. This is as recent as 25th of March of this year. I think I went back, I'm sorry. Okay, yeah. As I spoke about, Africa is endowed with a pre-existing, culture of financial bookkeeping and susu. We've engaged in barter trade already. We have credit systems already in place during the old days, through borrowing and lending of livestock, and all this happened without the benefit of bank accounts. So I guess my point really is, with all this in place, bringing in technology, that makes it a lot easier. And I spoke to, I was speaking to, the head of the library about this earlier. It allows the continent to take what's called a telescopic leap. Okay, we don't have to go through the same learning process and the growing pains as others have. It's a lot easier to learn from what, from previous experience, and actually pick and choose what's relevant to our environments. And in this particular case, I think with the existence of infrastructure and the pre-existence of our cultures, which already recognize credit systems and cash, and barter trade, bringing in mobile telephony will create a much more rapid, in my view, transformation of economies, create more jobs, grow the GDP, empower the poor, and in the end actually make our financial systems a whole lot bigger and better. And that's it. Thank you. Thank you very much.
Okay.
Questions?
We can open it up to questions, and Mary Jane gets the first question.
Thank you very much. This is a very exciting subject, so I'm delighted that you're here and you're talking about the subject. I wanted to ask you to give us examples. You talked about women and telephony.
Yeah.
And can you elaborate, give us examples of how that has helped women specifically?
Of course. We can go down to sort of the cooperative level, okay? I know in Namibia, where I spent time, we had a situation where we had retired women, grandmothers, who ADF had actually funded to engage, and this is a serious matter, engage in brick making, okay? Not brick as in the small brick, but block making. There was something wrong with that picture because you had, much older women, doing this. Obviously, we went through the whole process of, changing that, bringing in younger people. But I went back a few months ago, November of last year, and what I discovered was that the advent of mobile phones had actually allowed them to now not just produce bricks through their younger sort of team, but actually get a sense of what because Namibia was going through a building boom, what they would get for their bricks, based on the bidding that went on between contractors in the northern part of Namibia. For those who don't know Namibia very well, it's divided into two. There is the part above this imaginary red line, which has the northern part, which has malaria, they say, and the cattle is bad and sick, et cetera, et cetera. But it also houses the majority of Namibians there. And in the past 5 years, it's experienced a boom in construction and the like, because all of a sudden, the red line, doesn't exist anymore. And so, because the boom occurred so suddenly, the indigenous people were not really equipped to actually take advantage of it. And so what my successor at ADF they've been engaged in was they basically helped these groups that we funded before through we have what's called a reinvestment grant, where each investment we make has to pay back some funds into a local pool. They've used these funds to help these groups now actually take on technologies that that make the projects more viable without ADF obligating more funds. And what I saw with this group was that they have a significant use of mobile technology to actually get information. So that's one example. In terms of Kenya, and this I found out through my research. You have market women who basically sell in town, and for them, having to carry money home in cash after their sales is a major issue. Kenya has about 19,000 agents, M-Pesa agents, and they're all stationed in places that make sense for the market people. So you get a case where you have a group of, market women who have a credit account, with an agent. So instead of, paying them cash directly, you actually pay to, to the agent, and then they get the, credit on their phones. It's a whole lot easier, because then they would just, carry their electronic money on their phones. And I think, that improves the, safety issues for them, I think. And also gives them a sense of accumulating funds somewhere without, having to, because, I mean, if they're anything like me, if I have cash on me, and a demand hits you, you're spending, we're all very human in that sense. And so it gives them a much greater sense of, financial security with respect to planning and, just been. So those would be two examples that I can give. I hope they're adequate. Yeah.
I have a comment. You talk about Susu.
Yeah.
Well, it's thriving in the United States. A lot of immigrants
Yeah.
have businesses because of Susu.
Yeah.
Latin Americans, Koreans,
Mm-hmm.
Indians,
Yeah.
everybody into Susu.
That's right.
So it's not just the Africans, all of these.
No, I agree with that absolutely.
Yeah.
No, actually, you're right. But all the groups you mentioned are actually not real Americans.
No, they're not. But so that everybody's into Susu, that's how they're able to get a large sum of money
Right.
and start a business. So a lot of entrepreneurs, that's how they get started.
Absolutely.
Yeah.
I'm sorry. I'm sorry. Susu. Susu is a system of pooling money along either cultural lines, friendship lines, or just business lines. Historically, it's been along cultural lines. People who know each other or are from the same ethnic group, et cetera, et cetera. Families, sometimes they pool money as a way to ensure that whichever part of their circle is most needy or has the most potential to generate money, to actually support them. Yes, SUSU, absolutely, yeah. It's quite common, actually. It's quite common globally. Yeah. Yes. I'm sorry? Foundation. We have done projects that cover. We've actually done grants in, I think, Zambia and Tanzania that have, Tanzania and Zimbabwe, sorry, before its sanctions. That dealt with paprika, okay? And the externality from the investments were put into cell phone use, cell phone pooling, pricing. Also in, was it Liberia or Nigeria? One of the countries that I was in, we brought in a milling plant for them, to mill grain, and part of the budgeting looked at how they could actually discover pricing, and we toyed with the idea of cell phones, but I left before it was implemented. I'm sorry? Typically, they all have cell phones already. Because you can get a cell phone now for the equivalent of about $10, and in a lot of cases in the really rural areas you can buy it on credit, and just pay as you go. Yes.
Talk about infrastructure and fiber connections.
Yeah.
It's more of an international aspect. Maybe the internet or global. But how about the last mile aspect?
Very good.
Wherever remote areas, and they have a cell phone for $10, but they haven't landed yet there. What are some of the challenges with that? Are they using satellite or towers or something like that?
Okay. Up to about 3 years ago, most African countries were using VSAT, which is very expensive. It's very short aperture technology, and with the onset of the fiber wave, a lot of countries have actually built their own networks internally. The cell phone companies have also invested in it, because for them it made sense to put down that kind of capital cost and just get their money back through the use. They lease it out to big companies, mining firms. You have to understand, a lot of it was also driven by, by the big resource firms there. They were prepared to actually pay for this, for this. The kind of contracts that they would sign with a mobile firm would justify them laying internal fiber, last mile, okay? Then the third aspect of the solution has been microwave as the backup. So there is significant connectivity. There's a lot of coverage. Kenya, for instance, Safaricom covers 97.3% of the country, which is huge. DRC, they have what's called a Wi-Fi. WiMAX. Yeah, they have WiMAX E, I think, which is the most it's the technology before LTE, which is being deployed there now between Bascongo, Kinshasa, and Lumumbashi, where the mines are. So there's a lot going on. Angola now, Angola is providing, Angola and Zambia are providing DRC, parts of the DRC with fiber access while it is being built out. Angola has a huge huge fiber pipeline in country. Zambia has it also. And so what the DRC did was they paid them about $30 million to be connected while their internal sort of network was being built. There's quite a bit going on in this space.
Was it just the technology that VSAT is typically a satellite application?
Yes.
The fiber was going to provide a larger broadband base?
Yes, fiber provides you with more consistency. With VSAT, it's very expensive, one, and two, you're relying on wholesale producers, and their pricing changes every now and then, and also it's not very consistent. If it's C-band, you get weather issues. So it was much easier to just get something on the ground, which gave you a huge bandwidth. Yes. Very good question, because right now the Bank of Kenya, Central Bank of Kenya is coming up with legislation to regulate the M-Pesa, and so business business, what the cell phone companies are doing is they immediately partnering now with banks just to take away that risk. So Safaricom has now partnered with Kenya's largest microfinance bank, Equity Bank. And so that takes away their regulatory headache. Okay, and that's what's happening now. MTN is looking at doing the same thing with Standard Bank, and Obopay. They're already with Citibank. So the businesses are anticipating the risks to this huge sort of opportunity. Well, see, with M-Pesa, you can have a savings account without a bank, because you have all these agents, and then you have this phone. There's a built-in interest payment system that that they have. First, the agent gets a fee, and within the Safaricom cannot take deposits because it's not a bank, right? But the agents, they can create a virtual savings account for you, and they have little systems where people actually create their own markets where they have their own cost of capital and the like. So that's already happening. I think that's what's gotten the Bank of Kenya very concerned, because you have non-bank guys actually taking the deposit, and I think that's hurting them a bit. Yeah.
So going forward, could we assume that banks will try to stymie the growth of mobile technology because it does in some way compete with their business?
Good question. Since the crisis, '08 crisis, Basel II, Basel III, now there's a commitment to all banks just focusing on banking only. So as a bank, you can't own a brokerage anymore. You can't go into insurance. There's a clear move, to that. Even in the U.S. now, it's being discussed. In the UK, they just announced that as a bank, you clearly have to, separate these two things. You can't own a brokerage business and put, retail money at risk anymore. So that's all changing. Nigeria has probably been the most draconian, where Sanusi has said, unless it's pure banking, get out of it. So there's been sort of a complete disintegration, from the wholesale banks now. So the point really is that a bank cannot get into the, mobile business. That's out, okay? However, a bank can partner and have the transfer portion outsourced to them. That's where they can make money. Okay, it serves two purposes. One, the bank makes money, and two, the mobile guy gets rid of the headache from the central bank.
And just to kind of extend that question, on one of your slides you talked about China is, and a lot of us who know about what's going on in Africa know that China is making huge inroads into all aspects of African business. Do you see an emergence of China coming in to kind of make a profit or take advantage of mobile technology?
China Mobile, which a lot of us fear is, owned by, by the government, by the Chinese government, they have their own mobile technology. You have to remember, China's mobile market is the biggest in the world. And for them, I think going into the external markets now, outside of the U.S. and Europe, is probably not a major priority. I mean, I haven't seen any real Chinese acquisitions of African entities yet. Okay, I've seen Indian and other African, but not Chinese. Simply because their penetration rate is about 40% and still growing. It's growing at a huge clip. So there's significant growth there. And so my personal assessment is that I don't see it, it as a threat. I don't see Chinese investment into African telecoms as a major threat. I think the Europeans, and the Americans have a huge hold on that, and that's not going to go away anytime soon. Because if you look at it, unless the Chinese capital markets become the dominant capital market, most telecom companies like to raise money, and you go to the most liquid market possible, which is the U.S., UK, everywhere else. So unless that happens, what's the real use in having a Chinese shareholder as an African telecom? There's really sort of Okay. Yes.
Can you speak to the rising availability of smartphones and tablets, and also, do you have any numbers on platforms? I mean, I'm assuming Android is the largest, but do you have any numbers on that, or do you have a sense of moving, in the future, what platforms are going to take over?
Right. iPads, you're speaking to platforms, not hardware, right?
Yeah, like operating system, like
Okay,
Android,
got it. The way the cellular industry operates in Africa, typically you buy most people buy their phones unlocked, completely new, and so whichever phone, the kind of phone they buy will determine what kind of service is on it. Apple is about 16% of the market. So if you're buying an iPad or or an iPhone, you're getting what you're getting. Android has the I guess the majority on in the market, simply because most people aren't buying Apples. In fact, we're having this discussion with respect to the platform and the applications also. I think the understanding and the market's perception is that Africa will probably move beyond apps, simply because for all the hoopla is actually a passing issue. I mean, it'll pass reasonably quickly. I mean, there are about what 500,000 apps out there, there's no way you or I can actually go through a tenth of them. So, I mean, in all, for all intents and purposes, it'll pass soon, as a fad. A few core apps, will remain, weather, news maybe, or, Reuters, Bloomberg, IM, but everything else will pass. And the market's bet is that this whole phase with apps, we won't see it in Africa because it's really superfluous. We want we want a phone that has a very stable, operating system that can do transactions, pay bills, receive money, check the weather, horoscopes, soccer is big, those basics. So, I mean, it's kind of like, the smartphone thing may miss Africa. Of course, there's an elite, 7% of Africans who always buy these things. Okay, so, there's a market for that. Yeah.
I have another question about, and you may or may not be able to speak to it, but because the continent has benefited from fiber optic technology, what does that mean for like Indian Ocean islands? I know, for instance, in
Good question.
Madagascar, that financial security, like making transactions, is
Right.
very tenuous because they have to make cash transactions,
Right.
and there's a high chance that somebody will get robbed of their money after they finish selling their zebu
Right.
or whatever. So how does that affect the outlying portions of Africa that may not be serviced right now?
Actually, they are, because Mauritius, Madagascar, and Seychelles have a unique function in Africa. They serve as the intermediary financial centers. Mauritius is a huge financial center. I mean, as a PE guy, we set up SPVs in Mauritius because special purpose vehicles. Because Mauritius, they have laws which they have what we call IPA agreements, investor protection agreements with most African countries, which make a lot of sense. In that, as an investor, even if I was a Ghanaian investing in Ghana, I would go through Mauritius. Why? Because I want to take advantage, of the agreements. By virtue of the fact that they have very robust financial systems, they have these agreements. They have become a part of it. So if you look at this map, for instance, Madagascar is connected, just on GP. Mauritius is, Seychelles is, and they're all there. So I mean, they are not out of it at all. Prior to the big bandwidth coming in, they had VSAT. They've always been very integral to the continent. Also, Africa has a huge Indian population. Okay, they do all their banking out of Mauritius, so it's a very important place for them. Madagascar, as you know, is the world capital for vanilla. So there's still quite a bit of stuff going there. Yeah. And Seychelles, is the tourist spot for the Brad Pitts of the world. Yes.
So following up on this, how much business is being done on these phones with outside groups, let's say in India
Right.
or in Asia or in the Middle East or in other places?
Okay.
Are these phones used primarily internally within the countries, between the countries, or
Actually,
are
no.
they used internationally as well?
Right. For trade internationally, I'm not so sure if they're there yet, because international trade, because it's faceless, you may need a trust institution like a bank. But Western Union, so the remittance trade, the $360 billion remittance trade, a good portion of it is done on phones now, which is another reason why the banks are now inclined to regulate, because you don't know where the funds are coming from or where they're going anymore. And so yes, so a good between 10 and $20 billion a year is done on phones now. In the eastern and in fact in Nigeria also now. It's quite a big business. Yes.
Another question about governments and their support of this, because, well, we know that a lot of the Somali pirates use mobile technology
Mhm.
to to move their money once they've received their ransom money and to be able to move it around the
Mhm.
country. So are there efforts, I mean, are most governments in support of increased cell phone technology, or are they also seeing some of the caveats?
Most governments are in support of increased regulation of cell phone banking. Okay, and you know, as I said earlier, these smarter market leaders are taking the step already and just partnering with banks so that there's there's some regulated transparency, in terms of the wires. The only question mark is the Western Union side. But I think Western Union is so regulated here that it'll be easy to actually trace where where funds are going. Yeah. Yes. I'm sorry. Mhm. I'm sorry, your questions? Well, ICT, I mean, that's regulated by the International Telecommunications Union, ITTU. So, they have their own set of rules and regs. Also, within every country, the National Communications Commission or, agency has to agree and contribute to the, and I assume you're speaking to this fiber network outside. I guess I don't understand the question. When you say externally, what do you mean? Mhm. Okay. 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 Oh, good. With respect to cell phones, the physical, item, that's an import. There are already existing rules, around that importing technology. There, duties around that. So that's well taken care of. With the fiber, that is a joint effort. The governments will, no government in the world will allow a foreign entity to come and just plug in. It has to be coordinated. There has to be, landing points, termination equipment, the whole works. The national communications guys, have to be involved. So it's a whole process. And so although I think it's manufactured outside, the handsets form part of the international trade value chain, anyway. The supply chain, and the fiber, that's clearly based on bilateral and multilateral arrangements. So there's built-in regulation already. It's not yeah.
Any other questions? Okay, if there are no further questions, I'd like to thank you for coming and thank our speaker for coming and spending his time and sharing his knowledge with us. We look forward to seeing you at the next African Middle Eastern Division program, which I believe is tomorrow, in the Hebraic section. So please help me thank Mr. J. Kwabena Addo for his presentation. Thank you.
Thank you.
This has been a presentation of the Library of Congress. Visit us at loc.gov.